Hey, good afternoon, options traders, and welcome back, everyone. I received a good question from one of the traders in our group, and he was asking if you can track your Greeks, historic Greeks, in the Thinkorswim platform. And I responded by saying it depends on what you mean by historic. If it's an option that has expired, you cannot go back and see what the Greeks were. Now, you can, in Thinkorswim, go back and see the option prices. You can do that either on Think on Demand or on Think Back. But in either of those systems, you would not be able to see the Greeks. But if the option is currently alive, whether you own it or have sold it doesn't really matter. But as long as it's a contract that's in existence, you can definitely see how those Greeks will behave. And even better, you can go back through a pricing model and maybe see in the past how they might have been, depending on assumptions, or how they might behave in the future. Okay, so to do this in Thinkorswim, it's pretty easy. You're going to come up here to the Analyze tab, and then that will usually default you to your risk profile. This is where you're going to see your profit and loss diagram, and this is where we will also see the Greeks. But we have to put some trades in first. If we want to use simulated trades, come up here to this tab, and I just happen to have Microsoft in here, and let's put, got vertical spreads. So the stock closed at about 232. Let's maybe do the 230, 235. So I'm going to change this to 235, and we've got 5 contracts. Let's make it a cost of 3 just to make the numbers easy. So if I have 5 contracts at 3, that's a maximum loss of 1,500 and a maximum gain of 1,000. So to see that, come back up here to the risk profile, and here we go. So the graph in blue is the expiration graph, and the graph in purple is what we are looking like today. So let's start with some numbers over here on the far left. You can see that the maximum loss is 1,500, and right up here the maximum gain is 1,000, which we already figured out, but that's exactly what the graph is showing us. Now to read this, just slide your mouse like I'm doing right here and line it up either on the blue curve if you want to know what your profit and loss will be at expiration, or look at the purple if you want to know where it will be today. So for instance, let's say that we just bought this spread for $3 and the stock goes up to 236. So let's line it right up there to 236. And now look straight up. And do you see where the white line crosses the purple? It shows minus 135.34. We would be down about $135 if the stock hit 236 today. Now, what would we have for a profit or loss if it happened at expiration? Well, that's the blue curve. So look straight up above to the blue curve, and that lines up at our maximum gain of 1,000. But the question was, what if we wanted to track our Greeks? So just looking at the blue line, I can see that we've got 0 deltas over here for all prices below our 230 strike. If we are between 230 and 235, we're on this angled portion. So that's delta of 1 times 5 contracts, or 500 deltas. And then above 235 here, we have, again, 0 deltas. That's why that line is flat. That's fairly easy when you're looking at expiration, but what if we wanted to know today? Well, come up here to Metric. Click there, and there's a whole list. There are your Greeks. Delta, Gamma, Theta, Vega, Rho. Let's start with Delta. And the blue graph is what we just looked at. Notice that if we are between 230 and 235, our strikes, this line is flat. And it's telling us we have the same delta. So look straight left, plus 500. That's what we saw before. We would have 500 deltas if the stock is between 230 and 235 at expiration. But if the stock is below 230, we instantly fall off to 0. And if it is above 235, we are again down to 0. So as always, that's fairly easy at expiration, but what about today? Well, look at the purple graph, fairly flat. This position isn't real sensitive in terms of delta, at least not right now, very, very flat. And that's a characteristic of spreads that a lot of traders are surprised by, just how insensitive they are while there's still some time till expiration. But if you wanted to know what your deltas would be if the stock was, let's say, 233, line up right there at 233, close enough, and if you look straight up, 47.46. So you'd have about 47 deltas today if the stock is 233. So that's how you read the purple line. Now what about gamma? What's our gamma going to look like? Come back up to your menu, choose gamma. There's your gamma curve. Notice that if the stock is up here at expiration, you have no gamma. Why? Because the position is expired. So if you're at delta 1, you've got 0 gamma, and if you've got delta 0, you've got 0 gamma. But today that's not true. So over here, let's zoom out a bit. There you can see that we hit our peak maximum gamma over on the far left side of the chart, and that's because we're closer to our long strike, which of course has positive gamma. If the stock price moves up, we start dipping down here into negative gamma. And our peak right now is going to be somewhere, let's say maybe around 255 or so. But I can just run my mouse across this purple line and see how my gamma is going to behave. So you work it the same way for all of your Greeks. You want to see theta. Here's your maximum negative theta. Over on this side, you'll have positive theta. Why? Because now both strikes are in the money, and the spread will now appreciate over time. But what if you wanted to look at different dates or different volatilities? You can do that down below. So notice that today's date is January 30th. What if I wanted to see how this graph would look, let's say, on Monday? Well, I have two choices. I could either wait until Monday, or I can click on my little calendar and I can just change the date right here. And I get new numbers. So this is just running it through a pricing model. I can also click on these little plus and minus arrows and see how they're going to change over time. There we go. So you get closer and closer to expiration. Look at those gammas go, getting very peaked. Okay, that can be some very dangerous points in time with the spread. We have to understand where those, look at those gammas, start going off into infinity if the stock price is right there at one of those strikes. What if we wanted to change the volatility or the stock prices? We could do that down here. Now, it might be hidden on your platform. You might need to click this little cogwheel over here, and you'll see right here what says volatility adjustment. And what this means is how many points are you going to tack on to the current volatility. It's not asking you for the volatility. So let's say that we think that volatility is going to spike by 5 points. Whether that means from 15 to 20 or from 30 to 35, we're just adding 5 percentage points. So let's make that number 5. Hit enter and watch your graph up here. See, graph changed a little bit. It's going to change those numbers based on a pricing model with an increase of 5 percentage points on volatility. What if you thought volatility was going to drop 3 percentage points? Make that -3, and the numbers change again. I could also change the stock price over here. How would my numbers look if the stock was, instead of 231.80, what if it was at 235? Make that 235 and watch our graph when I hit enter. It's going to shift everything according to these numbers down below. So that's a real basic overview of how to use the risk profile to at least see your Greeks, where they were in the past, where they might be in the future, based on a pricing model. And for anyone who'd like to learn more about the art and science of options trading, including a Thinkorswim training class, you can find it all at optionsatoz.com. Also, the Alpha Trader course, Strategy Lab, and a brand new technical analysis course. Also, please join us on the Facebook trading group, Options A to Z, and you can find a link in the description below.